Hey everyone, this is DayTraderRockStar, and this is the 10 for 1,000 watch list for the week of January 23rd. And first, going to start off with just a little recap of the market conditions, S&P 500, and a recap of the last week's watch list, and then the new watch list for this week, and the new kick-ass trade of the week. Of course, last week's kick-ass trade of the week was NTAP. Just to go over that was a high probability setup. And again, if you're not familiar with this terminology, HPS setup, it's probably good to go review the latest video I did, latest video on YouTube. It's really a good video to kind of describes the concept of the high probability setups, the time frames, and how to really how to distinguish between a shorter term setup and a longer term high probability setup. HPS was definitely a high probability setup. It really jumped out as we had multiple indicators, multiple bottoms. The stochastics on the daily were set up. The stochastics on the 60 were set up perfectly right here. Remember, we're going back to last week, so this is where all these alerts went out, and you can see that the entry was at 33.90 on Monday or Tuesday. I think it was a holiday Monday or something. And our exit was $35.96. It did go up above $37. So I mean, there was some more upside to this. It was perfectly timed rumors, but again, paying attention to the discipline and the strategy between the about the HPS setups is entering on the signal and exiting on the shorter term signal to really lock into profits, and understanding the concept of continual profits makes a continuous successful trader. And again, the old adage is you can't go broke taking profits. So as long as you have the patience to wait for these setups, probably that's going to be the hardest things. Other than that, you're going to have a great setups coming at you each and every week. So let's go back to the S&P cash chart. And we'll actually take a look at this. Start off with the 60-minute. And you can see the 60 minutes, the one thing the markets at this point is really, let's actually go out to the daily, is really at a point where you're overbought on a lot of people's charts. A lot of people out there saying, oh, this market's overbought, we're due for a correction, watch it. And you can't help but think that. There's no doubt about it. There's potential news out in Europe. There's technical levels that that we will run into eventually that will give us a little issue. But right now you can see the rally that started in mid-December, the Santa Claus rally, and it continues to go into the mid-January. So very nice rally here, very nice rally, and it's about. I always use the analogy of musical chairs. You want to be in the market as long as the music's going, and when the music stops, make sure you grab a chair. And so that's really hard to predict. A lot of people are coming out trying to predict the top here, and they could continue to get stopped out, and that's how the market works. The more people think that the market's going down, the further the market will go up. And again, the opposite. So again, we're not really going to make a strict call on the S&P. If I could say anything, I would say that we should see a little reversal at one point this week. Maybe it's a turnaround Tuesday. Maybe it's Wednesday midweek pullback. But you feel like it's out there. What I say that's going to trigger is some negative news coming out of Greece. Of course, they're in talks with their debt talks and creditor talks, and this has been kind of climbing a wall of worry. And I think the market has priced in some positive news. So even if we had a positive resolution to some of the short-term Greek issues, I think that would be a short-term top in the market, and the market's priced that in. It's kind of called buying the rumor, selling the news. So I'll be watching for that news as really a trigger in this market. Every time the market has pulled back, we've gotten good signals and it's moved up. And that's why last week's watch list was such a great watch list, because everything was setting up for a nice pop. Even on the 60-minute chart last Friday, we're pulling back on a 60. So we knew that we were getting close to a very good bounce area. And then again, the market opened up and we had that beautiful bounce this week. So we have a slight pullback on the 60 going into Friday. It's kind of not giving us any type of signal. You got to play it that way. You can't guess at this market. I mean, you can put out as many many calls as you want, but the truth is the market's going to do what it's going to do. And if you're in the right stocks at the right time, you will make money. And now, what is the key to that? Is staying out of the wrong stocks or getting in at the right time and getting out at the right time. And that's, again, I kind of stress the importance of the discipline, the importance of taking the signals, the importance of the HPS methodology. All these added together is going to help take that risk off the table for you and move on. So let's take a look at the last week's watch list. So I'm just going to scroll through the stocks, talk about the setups, and just move on real fast from there. Again, most of these worked out great. A couple of them had some news that acted against them, but overall, I think you're going to find that there's a really interesting education to be found here. Abbott Labs, again, remember last week we ended off on Friday. The watch list goes out on a Saturday, so it opens up for the next day. So we actually, Abbott Labs was on the watch list because of the 60-minute setup, lower part of the stochastic channel here. We were right in that level. Monday we got the gap up, and then we kind of got overbought. So the trade actually moved on a short-term notice, short-term setup. The daily was getting oversold. It still actually looks quite good. The last time we got oversold here, we had a nice push, and this was actually a HPS setup. We're getting very close to an HPS setup on last week. We had a fast little bounce, a gap up, and then we topped out on the 60-minute chart, and that was really the signal to say, be careful. Like I said, pay attention, take the high probability setups, but take your exits on the 60-minute chart. That kind of takes everything in effect, or at least take partial profits into 60-minute. You take partial profits, you can't go wrong at that point. The 60-minute versus the daily, you have a faster time frame, meaning that your setups and your moves will be in a faster thing. You can have a long-term trend on a daily, but inside the long-term trend, you can actually have, a very choppy market based off the 60-minute chart. So the object is to get in and get out, get in and get out. Put your money to work better on a 2 to 3 day time frame instead of putting it on a monthly time frame. So Abbott Labs actually did work out, nice little setup. It actually gapped up. And in cases with gap ups, you can't really do much with those. ARMH, let's take a look at this one. This one, ARM Holdings. On the daily, again, you can actually see the stochastics were pulling back into it. And I was watching this lower trend line, which we never really got to. It slowly grinded up. I did actually put a buy trigger in that 25 to 26 area. Meaning, I'd love to have gotten a little pullback into that, and it never really gave us that pullback under 26. It just continued to move higher. Again, that's kind of it's not really set up right now. That's ARMH. I would again, we're just going to go to the next one here now. CHK is an interesting stock because I'm holding the stock, and I got in it when we're actually turning down on the daily stochastics, which is typically a no-no. You want to go the direction of the daily, and but I was also trading on the 60. The 60 gives you a shorter term time frame, but it doesn't counteract some of the, we could easily get embedded here. Here's the 60, and you can see how this, got real choppy, and we flashed out here. We pretty much traded under the 20 from this point on, and from that point on, you could see that the move was down in the market. So this will give you a setup, but it won't give you a great setup on the 60 unless the daily's setting up also. That's why it's so important to wait for that daily 60, because every so often you could get news to wait for that daily to set up. Now, it pulled back, and as this embedded, it gave time for the daily stochastics to come back down. So again, now we had a daily stochastic setup, we have a 60-minute stochastic setup, we have a wedge pattern, we have underlying trend line. Everything pointed to a nice pop in this stock. And on Friday, we starting to see that 60-minute start to turn back up. We got a little pop at the end of the day. We'll see how this plays. Natural gas and the gas sector and a lot of utilities and electric companies have been in the worst case, and their charts are ugly. So if this does happen this week, you're going to look for a nice across the board rally on the natural gas and some of the utility stocks. And I have a lot of them, I'll mention a lot of them on the watch list this week. So we're going to watch for that sector. I think that's an important sector this week. Colgate-Palmolive was an HPS setup based off of you can see this 60-minute stochastics pulled back here. Price level was down in a recognizable channel. And we talked about on the 13th. We take a look at the 13th right here. We were oversold on the daily too. So really really a high probability setup right at that point. It was right there, and again, you could see the move from that point. And again, on the 60-minute chart, nice move on the 60. Actually gapped up, went up here, got a little overbought, started pulling back, came back down. Again, the shorter term time frame is effect now because the daily is no longer setting up. So now you can go on the shorter time frame. Trade still looks good to the upside, but the again, you're going to have to be in and out faster. So you had to be in around 88.20 and out about 90.20. That would be a great two-day trade, overnight trade for $2 is great for this type of trading. All right. Again, you can see the daily, which also set up. And again, you're not looking at a long-term thing. You're not really worried about what the stock is doing or what's. You want to make sure there's just you're in a good quality stock that doesn't have any hidden landmines in it. And hopefully there's no landmines in the overall economy and the market that's going to push these down, because these will work more than they don't. And only times they really get skewered and they don't work is when there's news related to the specific company you're charting, or the or the market, which could drag down a lot of things. So that's what you have to worry about. As long as you continue to take the high probability setups and the market is good, you should be fine. So Colgate-Palmolive, again, nice little daily pop. 60-minute really gave us that nice overturn, and we got a nice bounce area, and it seems to be bouncing here again. CME was the other kick-ass trade of the week. Really liked CME this week, and one of the reasons was we had a coiled stochastic indicator, a tightening of the coiled the stochastics as we were pulling back into an oversold level on the daily. But we already got that little bounce. So what happened was, got in on Tuesday, but got in against the 60-minute chart. So it wasn't a high probability setup. And remember, the 60-minute will react faster than the daily. So the daily could stay positive, but the 60-minute could give you a pullback. And a stock the size of CME, a $200 stock, which can make can run around. It can move 5 to 10 points in a day. Knew that was going to get in, got in it early, watched it pull back 6-7 points, almost 10 points, considering I took the, I chased it, and it was just too much, I didn't want to be hanging around there, but now looking back, and I'm saying, well, now if I would have taken the 60-minute pullback, which would have been the right direction of the trade, you can see the reaction, and actually this trade would have worked out anyway. So lots of times you have to have the discipline, and you have to have the hindsight to look at where your entry is. You want to have everything lining up for you. And once that happens, again, the majority of the time, over 75-80% of the time, these patterns play out. And you're going to see some of the results of these trades as we go forward. But there is a whole site that's going to be launched called HPS setups, or high probability setups. Which focuses on giving you the alerts and all the information for these setups off of a select list of stocks, which represent quality and great trading ranges. So that's going to be coming to you probably within the month. So keep an eye out for that. CSH, Cash Holding, it's Cash America. Here's another one. Nice call, stochastic. Well, guess what happened here? Downgrade, and they lowered their guidance. Now, it's an interesting concept. I bring this one up to you because guess what? I was in it. And you get hit with news, it's going to drop your stock no matter what. But the fact is that the stock was still set up. So, take it that you got that pre-market gap down. It was really a gap down. Couldn't do much about it. But at that point, the signal was still valid. So you would think, because the daily and the 60 gives you that high probability setup, you're actually going to be looking at a move up. And now if you take a look back at the daily, since that day it dropped, was a high probability setup, it continued to move. And again, this happens over and over again. It happened in Target recently, TGT, where you got oversold, you just got some bad news on same store sales, it gaps down, but from that point on, it's a continued move up. Again, so it tells you more that the technicals work more than the overall analyst predictions and news and stuff like that. That's already factored in. Again, Carnival Cruise Line, here, what a great example. Pretty much got oversold. I mean, the freaking ship sank. and it got a beat down. You would think that the company's going under like the ship, but you know what? What a rally back, you know, and really because the 60-minute setup really got oversold at this point. We pulled back into it, and you could go back and you could just look back at the 60-minute setup here. Each time it got down to that level, we had a significant, pretty significant bounce. So it just makes sense to take the trigger, even in front of, in some cases, the news. Now, again, if the news comes out and you're up here and you're still up here after the news comes off, that's what I use a pattern, a method called the 5 to 7 day pullback. And that bad news usually takes about 5 to 7 days to get that daily stochastics back into an oversold. And I usually wait for that daily to get oversold. So if we're up here, it usually takes about 5 to 7 days to get back down here. In the case of bad news, something, if you have a gap down and you wait 5 7 days, and then it usually reverses. So we're gonna zoom right through these. I know there's a lot of stocks on here from last week, but it's just kind of important to go back through them and see why they worked and why they didn't work if they didn't work. Again, EMC, very good setup. Nice move. I think it was a 60 daily. Actually, the daily, the 60. I'm taking a look at why that one was on the list here on the 13th. I think we were looking at the gap down. I was saying to pay attention to the 60, wait for this to come down. Never really even got down to that level, so didn't take that trade. Wasn't a part of it. So again, these are just stocks that go out on the watch list. Some of them I take, some of them, sometimes you can't take every stock out there. Gold Corp, nice quote stochastic, broke out on Friday. Not really moving too much, It's not moving too much. You can definitely see that we're now pulling back towards the bottom part of the channel there. Stochastics are pushing back. It's tough. It's a tough call on this one. Not really looking at it going forward. Halliburton was on the watch list last week, and the reason why, once again, on the 13th we got oversold on the 60. Now these are short-term. These are not high probability setups. Remember, the high probability setups will be the combination of the multiple indicators, the recognizable channel, the oversold 60, oversold daily, entry on the 15, all that defined. But these, again, on the 10,000 watch list, these are setups that should trigger during the week, during the week. If they're set up for a bounce, that's what I want to let you know. So Halliburton was set up going into Friday. So going into that following week, last week, it was set up, and you could actually see the 60 played out really nice and had a nice move. Now, it moved up to about 36.73. It was about 34.50. So it was a nice move over the course of a couple days. And again, the object is to get in here, get out here, because that really represents maybe a short-term top. Now, the indicator could easily become embedded and stay up here, but why take the risk when you could guarantee yourself walking out with cash? It's almost like a casino, right? You could definitely do that, but the object is to have the discipline, the focus to get in when the signals are telling you to get in. They get in and hopefully, you cut that in half. You don't have to be out right there. You could be out here, as long as you're in, anywhere under here. That's a plus. So this whole move is really predicted for you. All you're trying to do is get in anytime here and get any time here. It's just you have a lot of space here. So that's why you're trying to, just take advantage of it. Doesn't have to be, you don't have to get your perfect entry here and your perfect exit here. Don't get caught up on, having to nail every single movement. Eventually, this all adds up, and the setups come more and more. All right, so Halliburton, great setup last week. ICE, very similar to the CME. It was set up, again, similar to the CME. Had a little pullback, got oversold on the 60. The 60, what a push off the 60 to the top of the part, to the bottom of the part. Running 118 from 111, 7-point run in 2 days. Great setup, perfect stock for the watch list. Of course, we talked about NTAP earlier. NTAP was what was considered a kick-ass trade of the week. You could see the entry oversold. It was a high probability setup, And usually a kick-ass trade of the week will be a high probability setup because its multiple indicator time frame was all set up. It was some 5, 15, 60, and daily, all at that point. And from that point on, boom, perfect setup. I mean, this was something that you should print out, put up in your wall. Send it to me. I'll sign it. And tap. Oh, all right. Dr. Reddy, RDY. Dr. Reddy, I believe, was one of the kick-ass trades from a few weeks ago, or at least a good trade that we took off of this channel. It was a high probability setup at the time back here. All right, right back here. We had a recognizable pattern. We actually popped out of that, and I said, you know what? This is just, we're going to pull back a little, and then we're going to rally. And I called it right. It was just a tremendous rally. Look at where it's been now 2 weeks after the fact. 33. So we went from 29. I mean, you can't get better results than this in a short amount of time. Again, the object is to time your better setups. Because you look back once again and time your better setups. Here's a great setup. Here's a great setup. Here's a great setup. This is where you're putting your money to work. You want to get this move. You don't want to get this choppy move. Boom. Sticking around here. You're only taking it when the two setups are really setting up. So you get these bigger moves. You get this big move. You get this big move. Dr. Reddy. And again, Dr. Reddy set up last week because, even though the daily was a high probability setup and we got overbought, we got embedded on the daily. So we refer back to our 60-minute, and you can see the 60-minute pulled right back down, and it gave you your perfect entry. From that point on, that was a trigger. And from that point on, you had a nice little rally. And look, we got overbought, and look, we pulled back. Oh, but no problems with that because the discipline and the methodology gets you in and gets you out. Staples, talked about this a lot on the radio, and I said, I keep on going back to Staples. So I said, still at Staples. Staples is going to go. There's no doubt about it. Yeah, I didn't, and again, it was just a good base. We got oversold here. We kind of embedded up here. And then if you go down there, whenever you see the stock embedded, it's usually a sign of strength or weakness. Embedded means you're pinned up for 3 or more time frames of that, periods of that time frame. And that's usually because there's underlying pressure in the market. And you could just, usually see when you start to embed, and you could actually capture, you can see you're staying up there for 3 time frames. Then you could probably look for a better position or an added position. In that case, you could actually look at the 60-minute. I rotated down. We stayed up here, up in this level here for 1, 2, 3 days, and we got a slight pullback. So the 60-minute gave us the setup right there. I mean, it was simple as that. Right when you got down under that 20 line, you could have probably started putting your entry in, and from that point on, it was off to the races. So Staples showed you where that breakout was. And then the last one on the watch list last week was Vail. And Vail is just a stock that's on the HPS 40 because, again, the HPS 40 is an index of stocks that we want to constantly rotate it in and out, track, measure, report on, let you know, hey, this one's approaching a high probability setup. Let's, this will be a good, this is your entry. Don't forget your alerts when the exits come around, and you just take it off the table automatic. So, again, this is, I can go back. I did a lot of videos on this, describing this, probably on one of the last videos, so you can just revert back to that. But I think we took this one on the 60-minute chart here, and I was showing how multiple time frames add up, like on the 12:30 p.m. on the 13th is probably where that entry really set up. The daily was very strong. The daily wasn't giving you a really classic setup, so we're saying watch the 60-minute and watch the 15 to really get a good entry. So you could actually see we just kind of gapped up and rallied and moved up to the top part of this channel line, which you put in there by what I call the 1, 2, 3 pattern, taking 3 pivot areas, drawing one line and drawing a parallel line underneath there, and then taking the trades off of those lines, which all falls into that too. That's how you recognize a pattern. The video's on that. It's called the 1, 2, 3 method. Check it out. So again, 60-minute chart. This might set up this week. All right, it might set up this week. The the 60-minute are coming down. The daily is, and overbought. but the the downward channel here is effectively being broken. So we're going to expect a bigger move up here. So I hope that's good. And that was last week's watch list, a very highly successful watch list. Got lots of profits off of it. This week's watch list, I'm going to pick up right now. I'm going to turn this video off for people who are not subscribers to the show. So if you want that watch list, you have to actually come to the radio show, daytradingradio.com. But love to bring you the education about the HPSs and some of the other techniques we use on the show, and I'll see everyone Monday. But let's kick off the for the members out there. This will continue with the 10 for 1,000 watch list right now.